In today's video, we're going to discuss what changes have happened in the SBA 7A program since my last video in 2020 as it pertains to the 7A program. Now, if you stay till the end, I'm going to give you 4 myths and I'm going to debunk 4 myths about the SBA 7A program that you absolutely need to know about if you're going to apply for a loan. Let's get to it. Hey everybody, welcome to my channel. I am your host, Leo Landaverde, business broker and commercial lender, helping you scale your business and build wealth. If you are a small business owner looking to scale your business by purchasing a profitable business, or if you have a job and you want to escape the 9-to-5 by purchasing a profitable business, then you've come to the right place. And please subscribe to my channel and don't forget to hit the bell and you'll be notified every time a new video comes out. Just about every week, I get anywhere from 5 to about 20 emails a week from folks like you who subscribe to my channel, and thank you very much for subscribing to my channel, by the way, with questions that had to do anything from terms, repayment, prepayment penalties, guarantees, conditions, what types of industries the SBA lends for, etc. I would actually do a special video in the next few weeks on just frequently asked questions that I get, but for today's purpose, I want to talk to you about the 6 things that the SBA looks at when you apply for an SBA 7A loan in 2022. Let's get started. Number 1, creditworthiness, aka character. The SBA is silent on a lot of the creditworthiness requirements. They usually give the corresponding lenders the ability to set guidelines as far as your FICO, your combined credit scores from Experian, Equifax, and TransUnion. They just purposely stay silent because they want to give some freedom from the SBA lenders to do that. So what I always tell anybody I speak to is that you really need to watch your credit score. It's helpful for many things. And the SBA is no different. The SBA lenders are concerned about your character. Now, for them, how you prove your character is how you pay your bills. So they reason that if you have a hard time paying your credit cards, if you're late on your mortgage, and if you're late on car payments, even if it is once in the last 12 months, and it's reflected by having a credit score less than 680, then you're probably gonna have to overcome that. It's not impossible, but you're gonna have to overcome. So advice is you gotta take care of your credit like it is the most important thing for your business. Now, there's 2 types of credit. The credit worthiness that comes from your personal credit score, your FICO, your combined 3 credit bureau score, and then there's your business profile score that is the business bureaus. So there is the personal bureaus and there is the business bureaus. The SBA will most likely pull an inquiry on your business if you actually have a legal entity and if you have if you have a business entity that is actually registered to have business credit. So if you haven't started a business credit, that's a conversation for another video, but the SBA will look into that deeply and they want to make some correlations in that. So that is basically a check they're going to put on the checklist. That's number 1. Number 2, it's capacity. Now this is a biggie. Now, I've done this video that has been watched thousands of times in YouTube. It's called the debt service coverage ratio that goes into great detail. Now, if you haven't really watched that video yet, I would suggest that you watch that video next, and the link will be up here and actually down below. And that's important because capacity means that the business that you have, that you own, that you want to leverage has the to pay the loan is basically the coverage of the debt service, principal and interest payments. You have to have at least conservatively 1.25 over 1. So for every $1 of debt service that you pay to the SBA, $1.25 must be matched in your net income. Now, your net income can be explained in many different ways. It could be just simply net income in your P&L. It could be earnings before interest and tax, or EBIT, or it could be EBITDA, earnings before interest, tax, depreciation, and amortization. It really depends on how you run your business and if you're running your business on accrual or if you're running your business on a cash basis. I strongly suggest that if you're not running your business, if you actually have invoices and accounts payable and you're not running your business on an accrual basis, then you should do that because that's how banks are going to look at you and it helps with the balance sheet. So your capacity is your ability to repay the loan is probably the most important thing. So if you're actually leveraging your business to get a loan for working capital and you're losing money and you have negative cash flow or negative profit, the chances of you getting a loan are going to be increasingly hard. You're going to have to explain away as to why you've had losses. Losses are never good. Losses are never good. And my goal for any business that I advise on a regular basis is how do we get to profitability? First and foremost, how do we get to break-even point? Then, how do we get to profitability? Profitability is something you should be looking at every month to make sure that long before you have a need for a loan, you're actually able to sustain. You should actually work backwards. If you need $500,000, because I get calls from folks like you and emails every week, hey Leo, I want a $300,000 loan, I want a $500,000 loan, I want $1 million loan. And I ask about capacity and they don't really know their net income. How can you apply for a loan if you don't really know if you can afford it? So again, if you haven't watched that video, you need to watch it. But capacity is very important because it dictates how much money you can afford to pay. Now, if it is a working capital loan for the SBA, usually the amortization is usually up to 10 years. If that SBA loan involves commercial real estate, whether you're actually buying the commercial real estate within a 7A, or you're combining a 7A with a 504 loan, then that amortization may go up to 25 years. So, but just keep that in mind that the capacity is a big deal. Keep in mind 1.25 or better over 1 debt every dollar of debt service. Okay, this is a continuation of number 2. There's one thing that I want to add. If you're actually purchasing a business and you want that financed with the SBA, because the SBA will actually finance an acquisition of a business, which is huge. So if you're looking to acquire a business and buy a business, you should be looking at the SBA because the down payment requirements could be as little as 10%. And they can finance up to 90% of your purchase. How cool is that? You can actually leverage the SBA to purchase a business because it behooves the SBA and the SBA lenders to have the economy improved by you actually buying a business that will employ people, that will sell, that will enable commerce, etc. But it's very important as well, the debt service coverage ratio or the capacity to pay that the business that you're buying. If the business that you're buying does not have enough profit to give you a handsome paycheck every week, otherwise you're buying yourself a job. But if you not can adequately cover the debt service, then you're already at a disadvantage. Why would you purchase a business that is not profitable? We'll talk more about that in future videos, but I wanted to make sure that you know that as part of the capacity, which is number 2. Okay, number 3, collateral. Now, if you went to the SBA website and you actually went down to collateral, I want to let you know that the spirit of the SBA is not to collateralize anything. They don't want to, take all these pledges and take all your assets and take the equity of your home. That's really not their intent. However, they give discretion to the lenders, and not all lenders are created equals. There are some SBA lenders that only do 7A loans. There are SBA lenders that only focus on the 504 programs. There are SBA lenders that will only work in the 7A loan programs that are less than $500,000. There is not a one-size-fits-all, but what you should know is that you should be prepared to collateralize the loan. Think about it from the perspective of a lender. And by the way, the SBA is not the lender. The SBA is the guarantor, and they will guarantee up to 85% of the loan. So if you default, the lender will actually recover the entire guarantee, which you're going to pay for. That's actually one of the fees that you're going to pay for, the guarantee. So that's kind of how it works. The SBA is the guarantor, and they want to make sure that they can actually feel comfortable with that. So they will advise, the lenders themselves will write up in their guidelines what are they willing to collateralize. But if you think about it from a perspective of a lender, you want to make sure that you have every means necessary to perfect their loan, to perfect their interest on the loan. So if that means that they're going to they're going to file a UCC on your business assets, or they deem necessary because you don't have very good credit, remember, everything is closely related. If your credit is 740, for instance, and your business has plenty of cash flow to go around, say that you're actually profiting, 25 cents for every dollar. So if you're at 10 million in revenue, you're making $2.5 million a year, and the debt service is, $500,000, but you have $2.5 million worth of net profit. It may be immaterial because you have such a strong business. It's all about risk. If the risk is such that the SBA lender will require to collateralize, they may actually collateralize. You will personally guarantee that is regardless, but you may actually pledge your household, your equity on your home. You may pledge your business assets, anything and everything to lower the risk and to satisfy the lender's requirement on the collateral. Now, this is a big topic and you cannot ignore it. you cannot sign documents because chances are that there will be some small print in the work of the lender where you're actually pledging some of the anything and everything as collateral. You need to have somebody on your side advising you we're actually signing. So this is what I do. I actually help people who are actually wanting to get a loan to look at the fine print from the SBA forms and actually work as an intermediary between the SBA lender and you, and I'm here to help you. So that is number 3, collateral. Number 4 is management experience. Now, this is not often talked about, but I want to know about. So if my day job, I'm actually a chief financial officer for hire, and I run accounting departments for the companies that I engage with, and I actually help them as a CFO procure capital for their business. And I'm always interested in knowing what experience, if any, do you have in the business that you're running. Now, it is not always the case. So if you are raising capital through the SBA is going to want to see the resumes, the professional experience of anyone that actually has a 20% interest or over in the actual entity, in the legal entity, whether the legal entity is an LLC, C Corp, S Corp, etc. The SBA wants to know who's running the show and what experience do they have in running their business, because what it does is gives them assurances that their investment or the loan that they're putting in your business, you have the experience and wherewithal to be able to generate business, profitable business that is going to assure them that their debt payment, whether it's 7, 10, or 25 years, will be repaid. So know that you always need to be sharpening your resume. You should always be working on your resume. And if you're not in LinkedIn as a business owner and you want to be taken seriously by the SBA, you definitely want to have a LinkedIn profile that enhances you as the CEO, vice president, president, whatever role you play in the company. Hey, can you do me a favor? If this video is resonating with you and is helping you, please like and comment on my video. And it could be a comment that's just like, hey Leo, this is good stuff, thank you. Because when you do that, it helps you to find more people like you who can benefit from this video, and it really helps us all. Thank you so much. But the SBA will want the resumes as part of the business plan on the use of proceeds, on what experience any of the people that are involved are running the business. Now, it's often neglected that you're so busy trying to generate sales that you don't have the time to work on this. This is a living document. You should, and this is something that I say every time I speak before a large group, is when it comes to raising capital, whether it's debt or equity, now, you should you should look for money when you don't need it, because when you need it, it's too late. Again, I'm going to say that again. You look for capital when you don't need it, because when you need it, it's too late. And when you don't need it, it's probably when you have the most profit. You have the year-over-year growth, the quarter-over-quarter growth, your financials are great, and you're paying income tax. And you're only paying income tax because you're very profitable. So you follow me? Paying income taxes is not a bad thing. You should not always try to write everything off against the profit and loss so you minimize your thing, because how are you going to prove that you're having a profit if you don't have a profit? So there are ways that you can do add backs and conversation for another video, but your management experience is critical. Number 5 is documentation. Now for this one, I'm going to go over the list of the 7A loan application checklist. Now I will do my best to put all of this collateral links and everything in the description of this video so you can find it, but just you should know this, that you will need to fill out an SBA loan app, which is the SBA form 1919. You will need to provide a personal background and financial statement. Now, the personal financial statement is the statement of net worth. That is it's basically a balance sheet and a P&L about you to establish your net worth, which will be the net worth of multiple businesses in your checking account and everything, all cash and cash equivalents, etc. So that is something that is going to take a while to create. So if you have never had one, you're going to need somebody to help you with it. And that's something that I'm usually involved in, kind of quarterbacking. That is different than the personal background on you. Remember, the SBA is going to want to look for your credit worthiness established in some of the forms that are embedded, some of the language. So you're going to need your statement of personal history, which is SBA form 912. You're going to need your personal financial statement, which I alluded to, which is SBA form 413. You will need business financial statements. Now, when you come to any lender, or if you're talking to me, inevitably, pretty quickly in the conversation, I want to know about your business. I want to know how much you know about your business. I want to know about your year-to-date interim financials. Are your financials reconciled? Do you have a good balance sheet, a P&L? Are you keeping track? Is somebody doing your bookkeeping? I want to know your revenue, your gross profit, your operating expense, and I want to know your net income. I want to know it as a dollar amount, and I want to know as a percentage of your sales. I also want to know what you have filed with the IRS for the 3 preceding years. So if you're in 2022, I will be asking you about your 2020, 2019, 2020, and 2021 tax returns. Now, if you are actually have a corporation or a small corporation, S Corp, you're going to have your 1120S, and I want to see what actually you filed with the IRS as part of my pre-underwriting process. And the SBA and the lender will actually do double check that by the Form 4506, which is how you're gonna be able to, they're gonna request, you're gonna give them permission to request right from the IRS, and they're gonna compare the two side by side. So your business, you have to be on top of your financials. You have to know what your business is producing. Again, it's tied with the debt service coverage ratio because it hinges on your net income. So you have to be really tight on what you have and the way you present them. To the SBA is important. I strongly suggest that if you're not running accrual, you provide accrual type based financials. And I can tell right away when you're not really on top of it. So if you're not, I would say we probably need to tidy this up before we actually present it to any lender, because you only get one chance to make a first impression, and that's it. Enough said on that. In the financial statements is the P&L and the balance sheet. You may be required to provide pro forma work or projected financial statements, which is, I'm not going to get too much into that, but you really can build future P&Ls unless you have existing and past P&Ls done. But you will need it, depending on the size of the loan. If you're looking for a $4 million working capital loan because you you need some working capital and you want to buy some equipment and you want to do all these things, well, definitely gonna see how you think you're gonna be 3 years from now, and they want to see how you're thinking about your business, which, if you have experience in running the business, you will know how to create one. Again, they want to know your ownerships and affiliations, your business certificate and your license, which means you have to have all your legal docs in a row, ready to go. They might want to ask you about your loan application history, your income tax returns. I already said that. Your resumes, business overview. Now, this business overview and history is often neglected. Now, it usually happens as I'm talking to somebody and I want to know, hey, how much money do you need and for what purpose? What I want to know is if you have actually given some thought to exactly what you need, how much you need, and for what purpose. It tells me that you're ready. For instance, you may say, Leo, I want to get $1 million loan to purchase one of my competitors. I actually have $100,000 to put down out of the working capital of my business, which means I want the SBA to finance 90% of the acquisition, and I want to have $100,000 for working capital aside. And I know that the business that I'm acquiring is profitable, and I can help you sort all that out. But having a purpose and knowing, it tells me that you are prepared and you've gone the distance. So do not overlook this part. Now, if any of this seems overwhelming, and it probably is, unless you're doing this every day, it can get really overwhelming. But you need to understand that this is, when you get to the point that you need to raise capital for your business, you need to be serious about how you run your business. If you have any leases, particularly if you have any leases that you have your personally guaranteed, commercial leases are more often personally guaranteed by the owners if you don't have a strong track of business history. Now, if you do have a strong track of history of business and you're very profitable, you probably don't need a personal guarantee, but I've seen more and more personal guarantees are creeping in, which means if the business fails, you're still legally on the hook for them. The SBA is gonna wanna know about those. If you are purchasing an existing business, there is additional information, obviously, that they wanna know about your business and about the business you're acquiring, also the financials, the tax returns, the federal, any state filings, anything that has to do with the legal documentation of the business you purchased. It's when it gets really, really fun. So, but just so you know, you're gonna need a lot of documentation. I cannot stress that enough. Thank you for staying till the end. I know this was a pretty robust video, but I know you're gonna keep coming back to it. But here are, as promised, here are four myths about working with the SBA or misconceptions that I'm gonna debunk right now. Number one, you have to have AAA credit. Now, I talked about it at the beginning when it comes to your credit worthiness or your character, that you have to have, at least 680. The truth is that some lenders may want you at 650 or don't care if you're 640. In fact, bankruptcies may be okay. So if you actually had a bankruptcy in years past and you prove it to the SBA and to the lender that you've recovered and that you're built from there, even if it is as little as 4 or 5 years, there's gonna be some seasoning of the bankruptcy, since the bankruptcy, that you've rebuilt your credit. But I've seen many people, if you are an entrepreneur and a business owner, you know that at some point we will fail. And it's not uncommon to have a very successful business owner who failed a couple times and maybe one of them had to file for bankruptcy. This is just reality, and I have a lot of respect for those who actually bounce back. But bankruptcies may be okay. You have to tell the story as to why the bankruptcy happened. Now, if the bankruptcy was because you had a business and then your main client was, basically had 30% of the revenue and the revenue went away and you actually went negative and you couldn't support any debt that you had and you had to file bankruptcy in order to avoid the personal guarantees, that totally makes sense. Things beyond your control is what the SBA is looking at, how you'll be able to recover from there. Number two, the SBA does not finance startups. Not true. The SBA may be able to finance your startup, but again, your business plan, the strength of the management team, the credit worthiness, you may be able to, you think that you may want to develop a hotel, the SBA can actually help you purchase the land and use a 504 loan to build up and a 7A for working capital, and you may actually build a hotel from the ground up. And yes, the SBA does finance hotels. They love hotels. It creates employment and it's good for everybody. But you can actually get an SBA loan to actually finance a franchise if so long as the franchisor has a history of success that the SBA can cling on to for future success. Remember, it's all about lowering risk. Everything we're doing is about lowering risk for any lender, including the SBA, to guarantee it. Number three, SBA will require collateral. That's not true either. So how is it not true? Well, the spirit of the SBA is not to really pledge your assets unless there is something in your past that heightens their risk. Again, if your FICO is 750 and you have $1 million in savings and you're $2.5 million of EBITDA every year, and you want to buy a business that is equally successful and you walk on water, you're the best thing that ever lived, chances are you're not going to have a lot of collateral because your track record is a track record of success and the SBA will be privileged to work with you. Number four, the underwriting process may take months. Not true either. If you have your ducks in a row, if you already have your personal financial statements, you already know you have a free credit report, you understand your credit, you understand your business, you have all your tax returns filed, you know how much you want, you have a business plan put together, you even have projections for the next 3 years. It's just a matter of matching you with the right bank and you actually may be able to close in 30 days, although for the average borrower, it may take up to 90 days because, and then a lot of it doesn't have to do with the SBA themselves or with the lender. It may have to do with some license that you need to conduct business, or if you're purchasing a business that requires a license and the license may take up to 90 days to transfer, that's nobody's fault. It's just they're gonna need you to transfer that license to you before they can actually close the deal, and that'll be all resolved in escrow. All right, so those are the four. Thanks again for watching my video. I hope it was helpful. For a limited time, I'm giving away 2 of my most popular tools for small business owners. They are my Advanced Growth Plan Template and my Financial Projections Workbook. These tools are used every day by hundreds of small business owners and they are yours to keep. All you need to do is click on the link below in the notes section.